Hello all and welcome to my channel where I'm just this random guy on YouTube with a finance and accounting degree, and I just want to share everything that I know for everyone out there to become better with investing and personal finance. So today I'm going to do a video where it's very basic, very simple, but I feel like it's extremely important for anyone that's investing to understand how to look at stock charts. In today's example, what I'm going to do is I'm going to look at Apple. Big company, everyone knows what Apple is all about. So I think this is a great opportunity for me to break down a stock chart to show you exactly what everything means and what you need to understand. Now there's some stuff I'm gonna skip because it's way more advanced, but I'm gonna stick to the basic things that I think anyone should know. Okay, well the first thing here is we're looking at Apple Inc. And you always will see the stock ticker on the side, and that's what's in the parentheses. So you see the AAPL. You will need the stock ticker if you want to go search in Yahoo stock or Google stock or anywhere you go. But this is extremely important because if you open a brokerage account, you will need to search for Apple Inc. using that stock ticker. I mean, you could put the name in, but it's faster and easier if you use the stock ticker. And in this site that I'm using for this video is Yahoo Finance. You could use Google Finance or you could use your brokerage account, and most of the charts and everything in here will look the same. So the first thing I want to explain to you guys I'm looking at is the price of the stock. Now, right when you under where it says Apple Inc., it says $175.22. That's the price that the stock is currently going for. So if you wanted to purchase the stock at this moment, it will be $175.22. Now, I want you to pay really close attention to numbers to the right of that. Where right now it currently says plus $1.50. It doesn't say it in dollars, but that's what it means. $1.50, $1.50, it's up. It could either be green or it could be red. And throughout the day, currently I took screenshots with the market being open, so it's still, but if you're looking at the site, you'll notice that's changing continuously. It could go from $2, $3, it could go up and down, it could go all directions, it could go negative. It could change throughout the day. In the end of the day is when the number will remain static, and whatever it would show, like say if it ended right now and it was at $1.50, that means that's how much money it gained throughout the day. So the next thing, it also shows in a percentage. A lot of people like to discuss the price change in percentages. Some people prefer that a lot more than actually knowing the dollar amount, because if you say a dollar amount, depending on the price of the stock, it might not mean much. But if you've seen like a 2% or 3% jump in the price, that is huge. So you always want to look at that to know exactly how the stock is doing. So the next thing we want to look at now is we're going to go to where it says the previous closing information, which is the summary. Okay, this is giving you a nice breakdown about what's going on with the stock throughout the day. You can choose 1 day, 5 day, 3 months, 6 months, a year. You could choose it as long as you want. But in this case, I'm only going to choose 1 day just to explain to you as simple as possible. But my recommendation for anyone that's investing is do not look at just the 1 day information. You want to look at a 5 years. It's always good to get a 5-year picture to see exactly what the company is doing. A year would work, but they could have a good run in 1 year, and that might not give you a good guesstimate about how things will be in the future. If there is an opportunity to show 5 years, select that, and you can see how the stock is doing. So the first thing I want to discuss is the previous close price. In this case, it's saying it's $173.72. What that's saying is the previous time the market closed, that's how much the stock closed for. It closed for $173.72. Now it opened because it happens quite a bit, but not as much. But there is a lot of trades happening outside of the closing market, and there could be a lot of activities going on, and throughout the next day it could cause the opening price to be higher or lower. In this case, it's higher, so that's good news. That means a lot of good positive activities happening outside of the market times. So in this case, the open is $174.09. Just in case you're wondering why did it close at 173 to 173.72 and now opening on 174.09, is because of the aftermarket trading activities. I don't want to get too much into the bid and the ask. That's a little bit more complicated. If you guys really want, drop a comment down below. I could do a video on a more intermediate level, but for anyone that's just starting with investing, that's something you really don't need to worry about. The next thing is the day's range. The day's range is important because this is letting you know the fluctuation of the price throughout the day. In this case, it went from $173.03. So that means the opening was 174.09. That means it dropped quite a bit from the opening. And then it went all the way as high as of 175.37, which means the price actually went higher than the opening is. And we've seen that in the beginning as well, that the price was higher than the opening. So you get a good idea about what is going on throughout the day. And if you're noticing, it's a $2 swing throughout the day. It's a pretty good movement. Obviously, you're gaining, so there's nothing wrong with that. But that's what the day range is for. It's letting you know what's going on. The next thing is the 52-week range. Now, this is important as well, and I think it's really critical to watch, and especially for you, is because you can see within 52 weeks how this stock has performed. We noticed that it went down to 155.98. So that's the lowest it had ever been in a 52-week range. And then went all the way as high as 199.62. Now you may be wondering what causes prices to go down as much as it does and up as much as it does. It could be simply just news-related content. It could be the fact of they might be pushing out a new product. And with Apple, you know that's always the case. They have the Vision Pro coming out. They might have a new iPhone coming out. There's so many things, so much information that's out there that could cause investors to either buy or sell and to push the price down or to push the price up. So that movement of only, $45 throughout the 52 weeks is pretty good because, I mean, today it's opening at 174.09. So that means there was a time the price was $20 higher. But like I said, it really depends on the news. People react a whole lot once there's some good news out there about a company, and Apple is always in the news. Now, the volume. The volume is 13,686,594. What does that mean? That is letting you know how many shares have been traded throughout the day. So it's been 13.6 million shares traded throughout the day. This is extremely important. The reason being is if this number was low and you had a share of the stock, that is letting you know that it is not that simple and easy to trade it. So your stock is not that liquid. You never want to get a stock that has low volume because yes, it could have a great day, a good rally. Your stock could triple. But if the volume is low and there's not many people out there willing to buy it, that could be a big problem. That could be something where you will just be stuck with it and it will be difficult to sell. You will sell it eventually, but it won't be as quick and as liquid as you would like. So always pay attention to the volume, and this is Apple. So obviously 13 million, and that 13 million, if you notice on the chart, I took a snapshot of like 10 o'clock in the morning. So the market had just opened. You can imagine what's gonna be like in the end of the day. The next thing we wanna look at is the average volume. Now, this kind of gives you an idea how the market might end throughout the day. If you notice, it's 13 million volume today, but the average volume is 59,125,448. That's a huge amount of stocks trading throughout the day for Apple. So that is good to know because, as well as I told you, if you're gonna purchase any stocks, it's good to know if it's extremely liquid. 59 million trading throughout the day means it's really liquid. You won't have any issues selling your stocks. Now, the market cap is 2.704 trillion. Apple is a monster. The way that is calculated is there's outstanding shares, the shares that are out there currently in the market, divided by the current price, or may I have it backwards, the current price divided by the market share, whatever. It's one of those equations. That would give you the total amount. No, it's not divided, it's multiplied. Yes, the total shares outstanding multiplied by the current prices of the stock is what the market cap is going to be, which means that's how much the company is worth. The company is worth 2.704 trillion. So as you see, when you're investing, you really want to look into that because that's letting you know how well a company is doing, how much money, how much cash they have within the company. And as we know, Apple is very strong. They're always known for holding so much cash, paying dividends. They have so much money, and seeing that is a great thing. Now, the beta, that's something that's more advanced. I'm not going to discuss that. That really got nothing to do with you now on the basic level to invest, so we could forget about that now. The PE ratio, which is the price to earning ratio, that's something you do not need to know about as well currently. Basically, that is an indicator, a stock indicator that people use in the market to verify if a stock is undervalued or overvalued. We all know a company like Apple is really popular, so we're not really worried about that. But that number 27.24 means, it could mean compared to other companies in the same industry, whether it's a good, strong company, whether it's undervalued or overvalued. One little key thing, in case anyone out there understands what price of earnings ratio is, like I said, I won't get into depth, is you have to compare it to things within the same industry. If you compare it to something outside the industry, let's say like you compare McDonald's to like Amazon, the price to earning ratio is different. Obviously, they're completely different companies, they sell different things, and you never want to use that to make a decision about what stock you buy. You always want to use the same stocks within the same industry. The earnings date, now this is an important date to understand as well, because their earning date is the date that the company will announce its earnings. If you notice, it says May 2nd, 2024 to May 6th, 2024. It's a guesstimate. It's going upon the previous times they did their earning dates. And that is a day where if they have good earning reports, stock will just sky high. It will just continue going the path it's going, and it might get a nice bump that day. If their earning reports fail what the market projected, it could be a pretty rough day. It doesn't mean it's going to be rough for the whole entire year. It just means it could be a rough day, and then once people recognize the reason why the earnings came out the way they came out, then everything will just get back to normal, because Apple is such a strong company and people want to buy. So if the price is dropping, there's going to be a lot of people willing to buy it knowing it's going to come back up. So the earnings date is important. Now, the dividend and yield, if there is a number there, that is basically letting you know if you own one of these stocks, you will get paid a dividend. It could be either quarterly, it could be annually, semi-annually, whatever the case may be. That percentage is letting you know how much you are going to get back in a form of a dividend. Usually companies that are strong, in this case Apple has 2.704 trillion, they have so much cash that they don't even know what to do with it. So they're willing to give it back to the investors, the shareholders, which is what you are. They will give it back, they will give you a payment in the form of a dividend. The best way to interpret this is 0.96 is saying for every share you have, you get 96 cents. Or you can think of it as the 0.58% is multiplied by the actual price of the stock. That's giving you a percentage. As you notice in the stock charts, they love to give numbers and percentages. So in this case, 96 cents per share, not bad, but you do need to recognize as well, and I have a video that I discussed this, and if you guys want more details on it, drop a comment down below and I can explain it, which is it is great to get dividends, but you need to understand that's considered income, so it can get taxed. Now, it depends upon what kind of brokerage account you have. If you're doing something within a Roth IRA and you're taking that money and you're keeping it within the Roth IRA, well, you would not pay tax. But if you have it in a regular standard brokerage account and they pay you this dividend, that's considered earned income, and you will pay taxes on that. So some people do not want to invest in funds that pay dividends for that reason, to avoid taxes. But some people actually, in a lot of videos out there on YouTube, people live off live off the dividend payments. It's usually the best time to do that is when you're older. A lot of people like to use that as like a passive income when they're older, but that is essentially what it means, and you want to look at that to see how much money you're getting paid. Now, a little caveat about that as well. If the number is so high and you notice the market cap is not that high, then your alarm got to go off a bit and recognize why they're giving me so much money for holding a share if the market cap is not that big. A lot of times they're doing that as a smokescreen. You might have had worked for a company that did a massive layoff, and then you found out they're still paying dividends to a shareholder. Now, obviously, since they're doing a massive layoff, that means the production and the quality of work is going to decrease. So if you're seeing that, that's like a sign. I would do more research on the company to find out what's truly going on, how they're doing in sales, are they doing massive layoffs, and what's going on with the company. Now, the next thing is the X date, and that's in reference to your dividend payment, right? So if you own this share of the company, you are entitled to receive the dividend if you have it within the X date, correct. And the X date for this is February 9th, 2024. So that's the date that is going to get executed where you would receive your dividend payment. And the 1 year target estimate is $184.96. All of this is a form of speculation. This is saying within 1 year, they believe the stock will go up to $184.96. You should not make your decisions based on this. This is just a guesstimate. No one can predict the future. That's just the way the market works. But it gives you a good idea of letting you know that the price of the stock looks like it's going to do well. Yahoo Finance is, as I said, it's a solid company, but they're just giving you a guesstimate. If they're saying that it's going to go up to $184.96, you can feel good that it's at least it's going to go up. But you shouldn't take that and make your trading and your buying decision based on that. So guys, that's really the most simplest way for you to look at a stock chart and make your investments and understand what it is you're buying and why you're buying into it. Now, a lot of people out there are just going to tell you straight up, this company, this stock that I purchased is doing so great, you should buy it. I never recommend just taking someone's word. You should go in and find out and just read this chart, look at this video again, and try to understand exactly what you're getting yourself into. Because to me, the best informed investor would be the one that could just make so much money and not have so much risk. There is risk associated with investing, but at least you would reduce the risk of just not knowing and recognizing that you're losing money on a stock just because you didn't do your research. And even if you do all your research, you still will have risk, but as I said, it'll be a lot less. If you guys want any more content, you guys want me to break down something else you do not understand in the financial market, please drop a comment down below. I'm making this channel for you guys, try to help you out as much as I can, give you all the information you need. That way we can all get wealthy. Catch you guys on the next video. Peace.